It seems to me the market's done a pretty good job of saying, we'll worry about these tariffs when there's evidence that they're harming the economy. And until then, let's focus on what we do know, and the economy is really strong, earnings are really strong. And I think, if this thing lingers well past the midterm elections, I think then it's going to get a little bit dicey. But what's the linger? The linger is that the tariffs are in effect? The linger is that there's going to be more retaliation? When you say linger, what does that mean? I think both of those. I think we're probably on a path to, You see both sides stepping back from where they are today? I think that's almost impossible at this point. No, I see both sides digging in, and this thing extending longer than people think and well into 2019.
I think this is another ingredient to the inflation mix. I mean, we have just about every inflation indicator pointing upwards, and this is going to add fuel to that fire. I think we'll hear some more hawkish comments from the Fed. We heard very hawkish comments from Draghi. And we need normalization of the longer end of the curve. So their quantitative tightening is in full swing. We had a 90% reduction in bond buying from the second half of 2017. So this goes into the mix.
Question about China, and we talked about this actually yesterday briefly. Why have the Chinese not threatened, and I don't suggest that they would do something meaningfully with their bond purchases, but if they just played around at the next auction a little bit, just to prove their mettle, if you will, I think that would send a real signal and shift this debate. Why don't they do that? I mean, I know that there's a larger issue which they'd be shooting themselves in their own in the foot themselves if they made this a meaningful part of their strategy. But to some degree, where the real leverage lies is there.
It's not the same issue that it would have been 7 or 8 years ago, because it would be not a terrible thing to see a 3.5% or 4% yield on a 10-year bond. If they did it in 2009, 2010, 2011, more of a disruptive issue. But at this point, the economy is much more healthy.
Yeah. Do you have a feeling for next year in terms of whether this market can sustain itself and trade at new highs again all next year, Simeon?
We're only 18 times 2018 earnings. So we're not that expensive given how much earnings growth there has been. That said, there are pockets that are a little bit cheaper. I mean, small and mid-cap stocks are trading at a 30% discount on a price-to-book basis to the S&P 500. So, certainly the large cap run has made them relatively expensive.
And like so many things, I could argue from both sides. If the economy stays strong, David, I figure corporate earnings continue to go up, but then you worry about inflation and higher interest rates. But if the economy did just sort of level out, then you wouldn't be as worried about the Fed, and multiples don't look so high. I could see it going up either way almost.
I think inflation's a real big issue next year. The Fed's worried that the labor market's tight, and they're worried about it. That was the whole gist of the speech that Powell gave at Jackson Hole, that they've made mistakes in the past about what the real natural rate of unemployment is. And we're well below where I think they're comfortable already. That's one issue. But the other issue, I think, for next year is I think stock prices can go higher because the earnings will be good. But valuations by a number of different metrics are quite stretched. And that implies relatively modest returns going forward. They can be positive, but I don't think they're going to be robust by any.
How do you feel about tech right now?
We've lightened up on our tech exposure. We think those valuations have gotten extended. We're neutral on the sector, the new sector.
Right.
And we've moved some of that money into the cheaper value parts of the market.
Same place?
The only advantage that tech has at this point is that they will be able to, because of pricing power, hold on to more of the tax benefits than some of the other sectors. But it's just very expensive.